you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Hello. You're late.
All right. But pretty soon we'll be able to automate so many of these features. It's going to be amazing. Not yet, but some point we'll be able to do all that. All right. Let's see. Hello. Okay. What did I want to? Oh, you know what? The staking thing has come back up again. So there is a more current article. Also, Frank posted this in the group, so you guys can see it on Telegram. Remember, be careful. Assume that everything on Discord and Telegram is a scam. Assume everything is a scam. Assume people are trying to steal your stuff. There's no such thing as admins. Even if there aren't. So if they're like, hey, let's do a screen share. Nope. Trying to steal your shit. So you have to be very vigilant right now. So anyway, let's talk about staking. Do we have a cool picture we can look at? Hold on. Let me see if we can look at a cool picture. Let's see if there's oh, no. That's something different. Sorry. You don't need to see that. That's super secret. No, I guess not. I guess we'll just go with prices in the background. Okay, things are a little bit off today, but I think that's just jitters over the getting this deal getting done. So I don't know if they'll vote today, but it looks like they will vote tomorrow. The Senate push through what would end the government shutdown. So the government turn on and at least push most measures through till January, where they will have to rejigger some stuff. But long story short, it looks like Wednesday is the day. Could be Tuesday, could be tonight, could be, which would be big for Wednesday. But it looks like Wednesday is the day. So I would not be surprised if things are quiet right now. And then as it looks like a vote's going to be held by the House, then passed on to Trump to sign, Wednesday, the government could be turned back on. I think that would be nice. It's one step in the right direction. All right. So yeah, there we go. Crypto for life. That sounds like that should be like a song. Anyway, whatever. Okay. Let's talk about staking. Let's talk about the staking. Staking. Let me close that. Let me find out where this damn article just went, that I just had it. There we go. Okay. Ethereum, Solana, ETF. I guess any ETFs, Solana ETF, there's like $4 in that. Any ETFs where the underlying asset for the ETF is a stakeable asset. And again, I'm just reading this. This is from Decrypt, and it is dated yesterday. So the IRS and the Treasury said trusts can now generate staking rewards for crypto ETF investors without fear of tax or regulatory repercussions. Now, I don't know. Anyway, let's go through it. So the U.S. Treasury and the IRS. Now, again, this is not the SEC. It hasn't begun, but framework. So the U.S. Treasury and the IRS issued guidance Monday allowing Wall Street crypto products to offer staking rewards under a new safe harbor. The move gives regulatory clarity to staking assets like Ethereum and other assets, which would ease institutional participation. Well, it would ease the institutions' barriers to participation. Industry leaders say the guidance could significantly boost mainstream adoption of proof of stake blockchains. Okay. The U.S. Treasury and the IRS issued new guidance Monday. It paves the way for Wall Street traded crypto products to generate staking yield for investors. So for us, in the Ethereum ETFs, that would look something like, it would look something like 3.5%. Is what it would look like, which is awesome. That's awesome. So we'll take it. I'll take it. Okay. Why is that thing so stop? Man, when the spam callers get you, they've learned all the tricks to get through all the barriers. They're very cleverly scamming. Anyway, the guidance creates a safe harbor for investors, for investment trusts to stake digital assets without risk running afoul of existing tax and regulatory guidelines. In situations where trusts fulfill certain easy-to-meet criteria, staking digital assets now appear to be a firmly greenlit institutional activity in the eyes of the federal government. And this came from Bessent, Treasury Secretary Scott Bessent. So can you imagine? I mean, think about what a decade ago. Imagine Janet Yellen saying today, the U.S. Treasury and the IRS issued this is directly from a tweet, issued new guidance giving crypto exchange traded products a clear path to stake digital assets and share staking rewards with their retail investors. See if I can take a cool little picture of it because it's picture worthy. I'll see if I can scroll it up there and give it to you. Okay, go. Oh yeah, look at that. So that's them, man. That's the man. The man's doing this. Not the a man, but the man. The man could be a woman if the man was a woman. You know what I'm saying? Anyway, but yeah, so that's pretty cool. To enter the safe harbor trusts, to enter this kind of safe harbor environment, trusts must hold only one type of digital asset from a permissionless proof of stake blockchain network. They have to follow certain liquidity protocols, perform no other function beside holding, staking, and redeeming the tokens in question, and rely on a custodian and an independent staking provider to handle the staking process. So for Ethereum, I think this is great. For Solana, it's probably good. I mean, a Solana ETF is not probably enticing to a lot of people, but if you can get staking rewards on top of it, and it doesn't debase the token too much, then it probably would make sense. Again, I don't think Solana ETFs are very exciting to anybody right now, and the money in them agrees. But if you could slap on 6, 7, 8% on top of that, then a lot of people that just look for dividend, I don't know. I don't know. I guess I'm in the middle. Dividend hunters might like it. On the other side of it, if they did any research on Solana, then they wouldn't like it. Tricky. There's a couple guys out there like pimping, like, oh man, Wall Street's really taking Solana. It's like, it's their darling. Like, no. That's you, Matt Hoogan. One guy is saying this. No one on Wall Street's waking up in the morning like, we got Solana, man. No one. The guys at Solana don't wake up and say, Solana, man. Why? Because they got rich at the sake of a bunch of, VC scumbags, and they don't care. Those dudes don't care. When the network shuts down, they don't care. It makes no difference. They're already rich forever. You've got $1 billion. Hey, your network shut down. So what? It'll turn back on at some point. Are you sure? No, not really. But I have $1 billion. You know what $1 billion buys you? The right to not give a shit ever. You can't. I'm not a billionaire, and there's a lot of stuff I don't give a shit about. A surprisingly large amount of shit. So it's a graduated skill. This is how you know along your journey in investing, the more successful you are, the less you give a shit about most stuff. Like your amount of give a shit, it's just all gone. Although I do still get mad and I cuss a lot when I play Population 1. But other than that, I don't really care about much. Like I was in Starbucks They gave me the wrong drink with the wrong cream. With like they just botched it. Every part of the thing they botched it. And I was like, oh, I'm gonna experiment today. I'm gonna experiment with some new flavors. And you know what I found? It's a drink I would not have normally ordered. But you know what I found out? I hate it. I hate it with a passion. It was disgusting. So sometimes it's okay to have habits. Anyway, U.S. Treasury Secretary Scott Bessent celebrated the guidance on Monday, saying it provided a clear path to staking digital assets on Wall Street and sharing those rewards with retail investors. This move increases investor benefits. Agreed. If we like Ethereum and we like its future, we like it plus 3%. Yay. Matter of fact, the way I look at it is it probably eats up most of those ETF fees because there's ETF fees, right? It's owning an ETF is not owning the underlying asset. It's owning it. It's owning it at a glance, at a distance. Anyway, it keeps America. This said this move increases investor benefits, boosts innovation, keeps America the global leader in digital assets and blockchain technology. I think that's fair to say. And for those of you that don't know, proof of stake, there a lot of the layer one networks are proof of stake, like Ethereum and Cardano and Solana and all this kind of stuff. They depend on users depositing their tokens within the network in order for them to securely function. You have validators, and those are like elected representatives, and you point your tokens to them, you designate them. In many cases, you give them your tokens, and that allows them to have a higher stake, which is they are more reliable transaction validators, and hence the proof of stake. Why does this little thing keep popping up? No. So yeah, in return for staking tokens and keeping the networks running smoothly, these user deposits accumulate rewards, which typically range from an annual percentage rate of 1.8% to as high as 7%, depending on the network and the amount staked. The higher percentage payers are usually this I don't want to say scummy or spammy. Those are the words that are coming to mind. The less secure networks. And it's kind of like the bond market, right? They have to pay you to get you to participate. The more people that participate, the lower that rate goes. So when you see proof of stake networks with a lower yield, if it's not a technical machination, then it's likely because it's highly subscribed. People are participating, which is good. The legal status of staking yield has vexed industry leaders for some time. During the Biden administration, anytime you preface it with that, everybody just goes, oh God, it's like a collective sigh. The SEC seemed partial to the idea that staking rewards could be considered profits derived from the efforts of others. Oh, Gary Gensler, what a still a piece of shit. The guy's still a piece of shit. Old bug-eyed Gensler, old punchy-faced Gensler. I hope he's rotting in some, obscure, little classroom teaching classes that mostly people don't go to. Old punchy-faced douchebag. Anyway, the SEC believed that staking made something an unregistered security. You like how they back into that? It's no wonder that he was so far up Elizabeth Warren's ass, or I guess maybe it's the other way around. She had her hand up his ass. And another thing, I know Nancy Pelosi's, did you guys see that? She's not running for re-election. Woohoo! She's going to take her almost $1 billion and go, I guess, because she's such a good investor. I wonder if her investment percentage increases, if she'll keep turning those returns. Does anybody think she'll keep banging those numbers out now that she's going to be out of the, she'll be on the outside. She won't be able to insider trade. Huh. Okay, real quick, Ardlin. All right, I want you to ask yourself that question out loud to yourself. Ask yourself that question. Would Bitcoin ETFs be included in proof of stake? So would Bitcoin ETFs have staking rewards? Bitcoin. I feel like if I say it 3 or 4 times, then someone in the chat would say, no, of course not. That's proof of work. And you'd say, oh, yeah, that's right. Proof of work. Proof of work is different. Proof of the work that's done, longest chain. Remember, proof of work is not proof of stake. You guys need to get this one right. Proof of stake is how Bitcoin works. I mean, it's how Ethereum and most of the layer ones work. Proof of stake. Proof of work is how Bitcoin works and other derivatives like Litecoin, like Bitcoin Cash, like I think Zcash is a Bitcoin derivative kind of product. Meaning these are all proof of work. Does that make sense? Proof of work. Proof of work. So you show that you did the work. Like in Bitcoin mining, there's make it, send it, validate it, right? Make a block of data, propagate it out. Everybody says you did the work. They stamp it. It's validated. Make it, send it, validate it. Proof of work. You did the work. You can show that you spent the electricity and hardware resources to generate this sufficient little code, the zero nonce, so that you have the right to say my version of the last 10 minutes, the last block in Bitcoin is the one. And so everybody, you send it out, everybody gets a copy of it. And they say, yeah, that's it. This is the one. Takes a couple of confirmations. Bam, done. It's in perpetuity. That's proof of work. You did the work, you get the reward. You get the block reward, right? Or your pool, someone in the pool, the mining pool, got, mined the block, and you all share in the reward based on your contribution of compute power. Okay, proof of work. Do the work, get the reward. Proof of stake is different. Proof of stake is like elected representatives. Your tokens are like votes. You designate them, and there's a few different versions of it, but the simplest way to think of it is you designate your votes, your tokens, to a validator, one of many. It makes that validator, that representative, have a higher stature or higher ranking, and they promote transactions. And as they move transactions forward, you get paid a reward of some of the reward that they get. Everybody gets some reward. Okay? Proof of stake. Yes. Okay, so there we go. All right. So I think we kind of got that. That's good. The impact on staking adoption should be significant, Bill Hughes, head of global regulation at Ethereum software giant Consensus, said Monday of the new safe harbor guidance. It effectively removes a legal barrier that had discouraged fund sponsors, custodians, asset managers from integrating staking yield into regulated investment products. Patrick Witt, the executive director of Donald Trump's Council for Advisors for Digital Assets, celebrated the Treasury Department's Monday announcement, which he said stemmed from a recommendation made in a White House report on crypto released this summer. So there. So, okay. So at least the IRS and the Treasury Department, which, remember, the IRS is under the Treasury Department, as is CID, Criminal Investigation Division, as is, well, there's actually a lot. I think that, there's a couple of other services that fall under Treasury. But anyway, U.S. Treasury Department has several little groups in there. Several little groups. A lot of them carry badges. Not all of them carry guns, but a lot of them carry badges. Anyway. Kitty! She's whining again. Hold on. Anyway, there we go. So, yeah. Okay, prices are quiet. Again, as expected. As expected. What else? Oh, there was some other. That's what I wanted to show you. Let's see. Okay. The article was about ghost job reports. And I thought it was interesting. So the employment picture may not be quite so obvious. Anyway, judging by current data, you think there's literally a job out there for anyone who wants one. At least if you listen to Jerome Powell in the other empty suits. Yeah, there's plenty of jobs. Everything's fine. Everything's amazing. But looking deeper under the hood tells quite a different story. Since the beginning of 2024, job openings have outnumbered hires by more than 2.2 million a month. Well, if you think about it, this makes sense, right? Do you post a job to one place? No. You post it to many places. Hi, Kitty. You post it to many places. So this kind of makes sense, right? So according to BLS data, that points to ghost jobs that never seem to get filled because they don't actually exist. The level of job openings as reported by the BLS for years has shown that there are at least as many available positions as there are unemployed workers. And they would just say, well, people just don't want to go to work. They're just the lazy American, and that was fine for central bankers and economists when they couldn't point to some drug addiction or something else. Because again, remember, when the facts are going against you, you have to just keep pulling new crap out of the air, right? So this is the economist way. It doesn't fit into my models. It doesn't matter how correct it is. It's wrong. It's wrong. Don't let the facts get in the way of my models. Comparing the openings with actually hiring and job hiring shows that not all those jobs are being filled. Not even close. In fact, since the beginning of 2024, job openings have outnumbered job hirings by more than 2.2 million per month. And this is the ghost job problem. It doesn't seem to get sorted out. U.S. labor market looks deceptively strong on paper. Millions of openings suggesting there's all this opportunity and everybody's yelling at you, go get a job, you lazy bum. But most of that is just illusion. Illusion. The ghost job economy. The ghost job economy inflates hope. It wastes job seekers' time. It clouds the data that policymakers rely on to steer the economy. Job openings have generally been on the decline since peaking above 12 million in March 2022. That's no bueno. That's no damn bueno. Yeah, what is... Okay, Brandon's texting me a thing that... Okay, I don't know what you're saying. Okay, Brandon's being weird. I think he's looking on the cell phone. Is anybody watching this from a cell phone? If you're watching it from a cell phone, yeah, the vertical stream is weird. So flip your phone sideways. Take it, flip it. Take it, flip it. Oh, okay. It tells me who. Maybe it does. It shows a little box. I think if it shows a little box, it means that you are watching from a cell phone. It was rendering weird. Okay. For those of you that's rendering weird, take your phone, flip your phone. I'm on a laptop and it's still weird, huh? Weird. Well, then you know what we're going to have to do? Yeah, it does look weird, doesn't it? If you're on a laptop, it shouldn't be weird. So what happened is StreamYard implemented this new thing where they're sending out this really cool new stream, a vertical new stream, but I think it's screwed up. I wonder if I can unvertical it. Camera. Nope. Visual. Let's see. Layouts. No, it's not there. General. No. Okay, well, I can't. I guess I'll have to do it from the main screen. Anyway, it doesn't matter. Yeah, it is what it is. I'm glad that Brandon took the time to send me 7 texts right now. I'm glad that we tackled this right now. I don't think there's any, you know what? You don't even need to be watching this thing to be able to absorb it. As long as you can listen, as long as whether you're vertical or horizontal, as long as the audio works, guess what? Don't give a shit. That's what happens. I'm telling you. One day you too won't give a shit. As long as you can hear my honey-laden voice, you're going to be fine. Anyway, let's talk more about ghost jobs. because the ghost job thing is interesting, because so many of these empty suit douchebags, not just the Fed, but just economists in general, they keep hitting you over the head with this. Oh, everything's fine, man. Everything is fine. Everything, like, no, man, goddamn, everything's not fine. It's impossible to find a fucking job. If I do, it's crap. I have to take a pay cut, work for some douchebag. Like, it is not easy right now. If you guys, hopefully you guys have good jobs or don't need them. But for most people, go get a job is ridiculous. That's like saying go change your eye color. Like, okay, let me just wish it. So job openings have generally been on the decline since peaking above 12 million in March 2022, when opportunities outnumbered available workers by better than 2 to 1. In August, the latest month for which data is available because of the shutdown, openings totaled more than 7.2 million, while hires were 5.1 million. Interesting. So there's all these jobs available, but they're not getting filled. Why is that when people are trying to work? The ratio of vacancies to workers was about even. The picture isn't as simple as comparing the two numbers, though. The posting numbers represent the total stock of jobs, while hiring are the flow of people hired during a particular month. So a job can get posted across multiple months without being filled, but that doesn't necessarily mean the companies advertising those positions don't intend to hire someone else. Does that make sense? Or just don't intend to hire, period. Moreover, some companies will post jobs just to keep an inventory of potential workers kind of in the queue for positions that may open up in the future. So they're interviewing you and it's all bullshit because they actually don't intend to hire you. So, and then finally, the openings to hire ratio has fallen over the past few years from 1.8 to 1 at the peak of the current job cycle to the current level of around 1.4 to 1, indicating fewer ghost jobs out there. So there's even fewer not real jobs to get. So not only are the ghost jobs, you can't get them, but there's even less of those. So that's not good. One issue affecting the gap is the changing labor pool as the U.S. has tightened its immigration standards. Small business owners report the toughest time filling open positions since the COVID pandemic, while noting that 88% of applicants for jobs lacked the required skills. 88%. How on earth? Really, how on earth can you run a business when 9 out of 10 people that apply for a job are unqualified? That's no bueno. The issue has drawn more serious attention in recent months as the labor market has begun moderating and net hiring has slowed to a crawl. Well, they're firing now. It's not that net hiring was already slow. There was job hoarding. These companies were holding jobs. Now they're just firing. They're just like, that's it. And you can call it AI, you can call it Skynet, you can whatever you want to call it. We are deep in a recession, and AI is taking jobs. It's an old double whammy. At the same time, official government data is currently unavailable due to the shutdown, which may end tomorrow. Job seekers have become frustrated at not being able to find new positions. Mobility has decelerated, with the quits rate falling more than 30% from what it was in March of 2022 during the peak of job openings during what was called the Great Resignation. They ain't resignating anymore. Let's see. There's a petition on change.org, which is a bunch of people that are saying, hey, we want to stop all of these companies from advertising ghost jobs. And they've got over 50,000 signatures. And it is fair. If you're going to look for a job and they're just bullshitting, they're just kicking tires, they just want to keep you in some potential hiring pool, fuck you. They should pay you then for your interview, shouldn't they? Anyway, there are real impacts on a policy level. Federal Reserve officials watch BLS job openings closely for clues, although when the numbers don't agree with them, they just simply discount the numbers. I don't know what the Federal Reserve looks at. They might look at their pocket watch. I don't know that they have any real relevant data that they make decisions with. It's what a bunch of weirdos. with just a bunch of old bullshit econometric models, and they don't even follow those. Like, they don't even follow their own crappy models. At least if they did that, you would say, well, at least they have some. There's some canon, something that they follow. No, not even that. Anyway, BLS numbers, as you guys know, are unreliable at best. For job seekers, it means wasted time. For policymakers, it means distorted data. For employers, it raises serious concerns about credibility. Until postings more accurately reflect actual hiring and actual job availability, workers will continue to chase jobs that don't exist and trust in a labor market that will continue to erode. Yeah, no shit, bro. That's how it be. That's where we're at right now. Yeah, price-wise, let's see. NASDAQ sliding a little bit because SoftBank sold its entire stake in NVIDIA. Listen, SoftBank's not known recently for having made good decisions. They made some poor investments, and NVIDIA was a good one. So I'm sure they're selling that because they are ass handed to them in other areas. And sometimes when you're getting beat up, you got to sell your winners. SoftBank selling its stake in NVIDIA. I don't think if you own NVIDIA, that should scare you. So SoftBank sold 32.1 million shares in NVIDIA during October. It also sold part of its stake in T-Mobile for $9.17 billion. So they sold almost twice as much T-Mobile. So this is not the first time SoftBank has cashed out of the chip maker. Despite the sale, SoftBank remains tied to NVIDIA through its other artificial intelligence ventures. SoftBank said Tuesday it has sold its entire stake in NVIDIA for $5.83 billion as the Japanese giant looks to capitalize on its all-in bet on ChatGPT maker OpenAI. So I guess they're going all all in. They're going full retard on OpenAI, which, probably makes sense. The firm said in its earnings statement that it sold 32.1 million NVIDIA shares in October. It also disclosed that it sold part of its T-Mobile stake. Let's see. We want to provide a lot of investment opportunities for investors while we can still maintain financial strength. Yeah, they're hurting. Yoshimitsu Goto, he's their chief financial officer, during an investor presentation. So through those options and tools, we make sure that we are ready for funding in a very safe manner, he said in comments translated by the company. Well, hopefully they were correctly translated. Part of the firm's strategy for asset monetization. So when you hear, listen, asset monetization, what does that mean? That means either redemptions or getting liquid, meaning selling. If I monetize my house, I'm pulling cash out of it one way or another. I'm selling something. Okay? If you monetize an asset, most likely, like when funds, there's a hedge fund. They're like, we're going to monetize the hedge fund. Oh, you mean liquidate? Yes. Okay, so just say liquidate. No. It's an asset monetization. Ah, got it. Liquidate. Yes. NVIDIA shares dipped 2% on Tuesday, and that's what seems to be what's bringing the market down because NVIDIA is the stock market. So if NVIDIA goes down, everybody goes down. Anyway, the sale of NVIDIA shares, partial sale of T-Mobile shares, and the margin loan on SoftBank's holdings in ARM are all sources of cash that will be used to fund the $22.5 billion investment in OpenAI. That is a pricey. They added that this cash will fund other projects the firm is working on, such as its acquisition of ABB's robotics unit. The offloading of NVIDIA shares has nothing to do with concern about the artificial intelligence valuations. The person said, while the NVIDIA exit may come as a surprise to some investors, it's not the first time SoftBank has cashed out of the American AI chip darling. SoftBank's Vision Fund was an early backer of NVIDIA, reportedly amassing a $4 billion stake in 2017 before selling all of its holdings in January 2019. Oh, what would that have been worth? Anybody want to go back on a chart and look at NVIDIA in 2019 and NVIDIA right now, I'm guessing that cost SoftBank 40 or 50 billion dollars. And I'm guessing this will cost them 40 or 50 billion dollars. Going full retard on OpenAI, I don't know if that's, I don't know. But it is OpenAI, and they probably actually already achieved AGI in some lab. It would seem like. Maybe they have. Maybe that's why all these people are going ape shit. Who knows? Well, we'll never know until we're well past it, or until it's OpenAI runs the whole world. Despite its latest sale, SoftBank's business interests remain heavily intertwined with NVIDIA's. The Tokyo-based company is involved in a number of AI ventures that rely on NVIDIA's technology, including the $500 billion Stargate project for data centers in the U.S. This should not be seen, this is from them, this should not be seen in our view as a cautious or negative stance on NVIDIA, but rather in the context of SoftBank needing at least $30.5 billion of capital for investment in the October through December quarter, including $22.5 billion of that, which is earmarked for OpenAI, $6.5 billion, which is for Ampere. So this is just them getting liquid. Listen, when you got to do stuff, you take from your winners, right? This amounts to more in a single quarter than it has invested in aggregate over the 2 years prior. So apparently something's got them excited about OpenAI right now. SoftBank made a point of saying that it wasn't any view on NVIDIA at the end of the day. They're just using this money to invest in other AI-related companies. So there you go. They're going full tard, and good for them. Good for them. I don't think an investment in OpenAI is a bad one, but I think taking the money from NVIDIA, I don't know if that's foolish, but I feel like it is foolish, and I feel like they're going to have lost a lot of money for a second time. It's like they got a second bite at the apple, and then that wasn't enough apple for them. That apple wasn't enough apple. So yeah, there we go. Okay, what else? What am I missing? Oh, why did it not? That's interesting. It's not. My chat is not up to speed. One of my chats is. One of them isn't. I can't tell. Crazy. We live in a crazy world. Anyway, all right. So that's what we got. If you guys have any cool questions, throw them out there. Prices are quiet. I think we're going to have a pretty good day tomorrow if we get that vote either tonight or tomorrow. And that would set up a wonderful set of trading days on Thursday, wouldn't it? For the option stuff. So we'll see. I think we may be getting to the edge of the bad times that kind of started October 10th. And it's 11:11. It's 11:11. Every time it's 11:11 in the morning. Matter of fact, I've got to make sure to take a picture of it on my phone. But every time, 11:11 is when you're supposed to make a wish. But today is 11:11, meaning everybody here gets a wish. You can wish whatever you want today. You can secret whatever you want, and depending on if this is a legit simulation or not, you probably are going to end up getting it. Although if it's my simulation, you guys are all just NPCs, and this is all just a very, very well defined video game environment with really, really high dexterity. Well, it's a high fidelity render, kind of like what we're doing with our AI company. It's a high fidelity render. Yeah. Anyway, let's see. Question. All right. Based on the anticipated vote, do you think the price of metals will rise too? Well, metals are rising because people are being kind of silly. But typically, gold is it's an uncertainty play and a debate in it's a deflation and uncertainty play. It's not a debasement and inflation play. People have that really, really wrong. And so they end up buying gold and silver, and then they get a flat decade and they wonder, I don't understand what happened. Because you bought it for the wrong reasons, dummy. So if you're buying, okay, let's do it this way. We're gonna make it easy. Okay. If you believe inflation and hyperinflation are coming, should you buy gold? Yes or no? Gold. Should you buy gold? We even say gold and silver. Should you buy precious metals if you think inflation and potentially hyperinflation are coming? Let's see what kind of answers we get. I mean, I feel like I prefaced it just not 3 minutes ago, but inflation's coming. Hyperinflation's coming. It's going to get bad. Should you buy gold? No. Mary nails it. No. You should not. Because that's not what gold is for. Gold is an uncertainty play. When you think that risk assets, you're uncertain. You don't trust them. I buy Bitcoin. Well, Craig, you would be correct, but for the wrong reasons. I don't think Bitcoin is an inflation or hyperinflation play either. It may become that, but it's not right now. Gold and precious metals are mostly an uncertainty hedge. When you're uncertain, when you're like, man, I don't know if I want to be in the market right now. I don't know if it's too expensive. I don't know if we're going to crash. I don't know if we're in a recession. When you have more I don't knows than I know, then you buy gold. Well, you buy gold. I would not touch it because it was dead for a fucking decade. Like dead, did nothing, dead. You lost a decade of investing, a decade. So the fact that it's been doing well the last 9 months, so what? Like really, so what? It was dead for a decade. And guess what's going to be dead for again? Probably another decade. And before that, guess what? Before 2010, it's pretty much dead for a decade. Yeah, longer even. So precious metals is an uncertainty play. It's a deflation play. It's not an inflation play. If you're buying precious metals because inflation or because debasement or because currency erosion, you're wrong. And you're going to get stuck with that shit. And it's going to be a long time. You're not going to be able to get liquid. Okay? It just is. Sorry. Bitcoin is a little bit different. Bitcoin, again, everybody's going to buy things. Well, let me do a little quick sidebar. If you buy something for the wrong reasons, but those are your reasons, then those are your reasons. So 11, I'm not telling you those are not your reasons for buying it. I'm saying those shouldn't be reasons to buy it, right? Hyperinflation, debasement is not the reason to buy precious metals. It might be your reason. The logic is flawed, but that's fine. Like whatever, your reasons are your reasons. So I'm not disparaging anyone's reasons. I'm saying that your fundamental theory is wrong if you're buying those precious metal assets for reasons of inflation and debasement. Remember, debasing the currency, printing tons of currency units, floating them out there, government lending and all this kind of stuff. The debt, national debt. No. Bitcoin is now different. So Bitcoin now it is kind of more aligned with Wall Street and more kind of hoovered up into lately kind of the tech, but not completely, because you see days where tech goes up and Bitcoin goes down or does nothing, and the reverse. So the correlation, I'd have to check. I bet the correlation now though is much tighter, right? Why? Because we have ETFs and the ETFs are big and they're popular, and therefore there's going to be more of a correlation to the stock market, and that stock market is necessarily tethered to tech, because if tech shits the bed, then the whole market shits the bed, and the ETFs are going to get punished too, right? You sell your winners to cover your losers. So I think Bitcoin and now to an extent Ethereum are more tech correlated because they are more Wall Street correlated. They're stock market correlated. And remember, stock market's not the economy. Stock market keeps going up. The economy is in deep recession. Ain't no jobs to be had. The wealthy are getting wealthier. Sorry. I don't know what to tell you. Sorry. Okay. Bitcoin is its own animal that, yes, while it is now more correlated, the reason I hold Bitcoin is because I look at it as a hedge against all around stupidity, not uncertainty, stupidity. And everywhere I look, people are fucking stupid. Politicians are stupid and dirty, most of them, not all of them. There's some good ones. That guy Howley, he's a badass. There's some good ones still out there, but mostly these are scumbags and they're crooks like Nancy Pelosi and Warren and all these other just pieces of shit. They're crooks. And they're also like, they're very arrogant, prideful, smug, assholey, crooks. Like they steal from you and then make fun of you for being poor. Like, why are you so poor? Oh, because you stole from me. You took all my shit. Yeah, but you're poor. Yeah. So if you find this system disagreeable, if you find the people disagreeable, if you find the idiots at the Fed as being incompetent and having just a complete inability to read the tea leaves, and if you believe government behavior and just fiscal conduct is nuts, then Bitcoin. Now, there's some people that believe in Bitcoin just for the network, just because of the network, the power of the network. Okay, maybe, hey, your reason is your reason. I don't think that's a great reason nowadays. I think that was a great reason in the early days and the network effects that were created, things like that. But so where gold and precious metals is an uncertainty trade, once there is certainty in any direction, once you know things are going up or things are going down, well, now you have the directional trades and you don't need to hold gold and silver. Like you wouldn't want, once there is certainty, if the NBR comes out and says we're in a recession and everybody just goes, we're in a recession, and the government turns back on, okay, then there's no more indecision. There's no more uncertainty. There is certainty. Or you might say there is less uncertainty. And when there is less uncertainty and there is more certainty, and you know the directional nature of the markets, you don't want to be in metals, because why would you? Where's the upside? Because again, it's not a debasement trade. It's not an inflation trade. It just isn't. It's an uncertainty trade. So you got to keep that. You kind of keep that in your mind. Now, gold is cool. Silver is cool, man. I got silver coins. I've got a bunch of silver, like bullion, like a bunch. I bought a while back. What was it? 2018. This guy traded me. He bought a Litecoin miner from me, an L4. I think it was an L4. For like $2,600 worth of silver coin of US coins that were like 90% silver. It's a big old bag like this. I've got it somewhere. Where is that shit? Anyway, I've got it somewhere. And since 2018 or whatever, 7 years or 6 years, seven. In that 7 years, the price has maybe 2.5, maybe tripled, maybe, I don't know, probably I doubt it. Maybe it's doubled. In 7 years, that is a terrible return on investment, but it's cool. It's cool. You can play with like metal and you put your hands in it and stuff. I want to have a bunch of gold coins, but I know that it's not going to make me any money. And your behavior right now, especially with AGI coming, needs to be, I'm either invested heavy in AGI, I'm using AI all the time, and I'm trying to make as much money as I can right now in my portfolio safely, before the robots take over, before software takes over, before humans are completely out of investing altogether, because at that point, there's a caste system. Think about it. If AI and AGI systems and pre-AGI systems and post-AGI systems and digital superintelligence systems are managing everyone's money, which they will, then what chance do you have to get ahead? How do you get out of your layer, your socioeconomic layer? How do you move up? You might be anointed because you're a genetic anomaly. You're like super pretty, and some, rich guy from 3 levels up plucks you out of that thing. Or I don't know. But once super intelligence takes over managing money, well, then how are you going to move up? They're managing everyone's money. Every tier is managed by the AGI. Every tier is managed by superintelligence. How do you go up? You can't, because they're all going up at the same rate. So I think we're stuck. We're like flies in honey at that point, which honey is delicious. But I think we're stuck. So you want to be making good decisions right now. And to me, sitting in gold is stuck. Like, do you think that there's going to be another year's worth of uncertainty? Or is the path of the economy more certain? That's what you kind of ask yourself. So people buying gold right now, thinking about 8,000, I think that's pretty stupid. Will it eventually get to 8,000? Yeah, eventually it will, because eventually there will be enough currency units floating around and enough uncertainty that would make sense. But, yeah, that's another thing. When universal base, that's kind of what I'm alluding to is AI managed finance is kind of like universal basic income, isn't it? Where everybody's kind of on. Of course, if you're poor, you're probably still poor. Although hopefully, AI would bring up, I don't know, there's a lot of weird social questions there. It's not quite so easy to imagine, like, everybody, I believe, not everybody, some Buddhists and things like that don't give a shit, but I would say most people in advanced kind of somewhat capitalist, or in most societies, people want to be able to improve their stature, their status. They want to move up. They want a bigger house. They want cooler shit. Now, there's a point where you might find contentedness, and I think there will be a segment of the population that finds some amount of contentedness. But most people, that won't work. No matter what you give somebody, no matter how good someone's got it, people just want more. They want more. So I don't know that a basic stipend income will intellectually, that's not even fair to say. I don't know that it will satisfy people. I know that it will cure housing insecurity and food insecurity. I think those things will be sorted out, and I think that's great. But I think everybody wants more. It used to be less is more. No. Now it's more is more. So I don't know. I think people are going to really, that's where you want to grapple with why. Like the other day when I told you guys, spend some time thinking about, why are you investing? What do you want to get out of it? What is your goal? And is it worth all of the stress that you have to routinely deal with in this space? Like, is it worth the ass pounding that you get? Because it's quite an ass pounding these days. Every 3 or 4 days, there's some tweet or some noise or some bullshit that makes your portfolio go up or down 8, 10, 13, 7%. And it can be, it is a tough emotional roller coaster if you haven't been through this a bunch of times. I like seeing the markets green. I don't like seeing them red. But you just got to have forward vision. You got to be thinking weeks, months, years out. Although now, the years out part is questionable. I think now we're thinking months out. I think if we got, in my mind, as fast as things are going, 18 months, I don't know. I keep thinking the clock is ticking, but maybe we'll get a little bit more. But I don't know. I want to try to hit at least my right now goals in the next 18 months. My right now goals the next 18 months. Maybe you guys should take some time and think about what are your right now goals. Right? Maybe I'm gonna issue another order, another edict. I want you to go get some Starbucks today. You don't have to get Starbucks, but support Starbucks. They're pretty cool. I don't know. Maybe they do some sketchy shit in Africa, but they have a chocolate cold foam, cold brew, and the foam has protein powder in it. You can get them with protein cold foam. It is delicious. And make sure you get them to put the chocolate foam in, the chocolate protein foam, not just the clear one. No, not the white one, the chocolate one. It is divinity, man, divinity. And get it in the cup, the not the to-go cup, the plastic one. Get it in the glass. You can get it in the glass cups. And so get it in the glass cup because it stays colder. And it is delicious. And then you can get a little treat. I like the little protein pack. It's got 2 eggs in it. It's got apples and grapes and that weird little bread clump thing. I don't mess with the bread clump thing. That thing that just looks weird to me. But you can get that, or you can get a plain bagel and have them toast the piss out of it and some cream cheese. Delectable. And then you can figure out what your 18 months from now goals are. 18 months. I feel like we have 18 months. I don't know that we have 19, but we have 18 months. And if you have 18 months to reach your goals, are you doing everything in your power to achieve that? Like, I actually thought about this yesterday, and I thought about I probably play VR like 2 hours a day. And I think that's probably wasteful because I don't think I get anything out of it other than it's good for my reactions, like reaction times, things like that. So I think I'm going to go to maybe either once every 3 days or maybe, a few days on and like a week off. Anyway, I feel like I don't want to just be wasting time, that I could be focusing on this and other things during this next 18 months, especially if this is the last 18. I'd hate to look back 2 years from now and be like, damn it, I blew it. I had time. I could have been focused. I could have been doing things, building, and I wasn't. So anyway, I would urge you to go take your coffee half hour and think about how you want to plan the next 18 months of your investment career, especially if it's the last 18. If it's not, that's amazing. But if it is, you want to be ready. And on that note, I'll bid you a fond adieu. Stay in school. Don't do drugs. Don't do anything my poor and solid drunk, sucking on a meth grandmother or Brandon wouldn't do. I know the weather around here is going to be, it's going to be about 82 up here in these hills. That's not bad. I might have to turn the pool heater on.